Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 23rd, 2025, and we're diving into Alcoa's latest earnings report for the third quarter of 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Alcoa, a leader in bauxite, alumina, and aluminum products, has just released its Q3 2025 results, and there's a lot to unpack, from production increases to strategic initiatives.
Revenue and profitability overview. Let's start with the financials. Alcoa reported a revenue of $3.0 billion for Q3 2025, slightly down from the previous quarter. However, net income saw a significant increase. John, can you break this down for us?
Absolutely. Alcoa's net income rose to $232 million, or 88 per share, which is a substantial improvement from last year. This increase is largely due to a $786 million gain from the sale of interest in a joint venture and a favorable mark-to-market change. However, when adjusted for special items, Alcoa reported a net loss of $6 million, or 2 cents per share.
Production and operational highlights. Alcoa has also made strides in production. Alumina and aluminum production both saw increases. What are the key operational highlights, John?
Alumina production increased by 4% to 2.5 million metric tons, thanks to higher output from Australian refineries. Aluminum production also rose by 1% to 579,000 metric tons. Alcoa ended the quarter with a strong cash balance of $1.5 billion, despite a significant $895 million charge related to the closure of the Kwinana refinery in Australia.
Strategic initiatives and future outlook. Alcoa has been active on the strategic front as well. Can you tell us about their recent initiatives and what they mean for the future?
Alcoa announced a long-term energy contract for the Messina smelter, which includes a $60 million investment. They're also advancing a gallium plant project in Australia with government support. Looking ahead, Alcoa expects stable production and shipments for both alumina and aluminum segments, maintaining their previous projections.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 7.7 for Alcoa, but the actual adjusted EPS came in at 2. How did Alcoa manage to beat expectations, John?
Alcoa's adjusted EPS of -2 cents was indeed better than the forecasted -0.7 cents, beating expectations by 0.5 points. This was achieved through operational efficiencies and strategic gains, such as the sale of their joint venture interest, which helped offset some of the restructuring charges.
Key takeaways. In summary, Alcoa has shown resilience with a strong net income and a better-than-expected adjusted EPS. Their strategic initiatives and operational improvements are setting a solid foundation for the future. Thank you for joining us, John.
Thank you. Alcoa's performance this quarter highlights their ability to navigate challenges and capitalize on opportunities. It's an exciting time for the company.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe. We'd love to hear your thoughts on Alcoa's performance in the comments below.